There's a reason why so many day traders say buy the dip, and it's because it is hands down one of the best trading strategies. But the problem is that so few people actually know how to buy the dip properly with an actual trading strategy. When I first started day trading, all I ever did was buy the dip, but every time I bought the dip, it kept going down and I kept losing money.
I can go lower.
I didn't know how to select the right stock, how to look for confirmation, or how to set a quality stop loss and profit target. All I knew was diamond hands and margin calls. But now it is one of my most profitable strategies, and I'm going to tell you exactly how to fix each of these issues so that you can buy the dip like a pro and start making money day trading with confidence. Let's get it. Now, there are two main aspects to mastering this strategy: finding the best setups and setting the perfect entry and exit. And the key to finding great setups? Setting price alerts, which, by the way, total game changer. No more watching charts, no more forcing trades, no more over trading, no more FOMO, no more trying to catch a falling knife. Setting price alerts is one of the many aspects that took my trading to another level. In fact, setting price alerts is how I found all the stocks that I'm actively looking at buying and that I'll be using in my examples today. That's exactly how I found this perfect setup on Oracle, and what we're looking for is a pullback to a strong area of support. This could be a price level, a trend line, or even a moving average, or preferably all three of them. And as you can see, I set a price alert at $112, right where we see this level of support, a trend line, a moving average, and right where the gap gets filled since their last earnings. And now that we have a pullback to a strong area of support, you're probably thinking, yes, it's on sale. Wrong. We first need confirmation that the stock is showing strength and rebounding. And then we need to make sure that the stock consolidates. And by consolidating, I mean an area where the candlesticks become less volatile so that our stop loss will be less likely to be hit, and so that we know how large our stop loss needs to be and where to set our stop loss. And once we've found a setup that has pulled back and consolidated like Oracle here, we'll then set our price alert on the breakout of the consolidation. And once that price alert gets triggered, that's when we set a stop loss and a profit target, then enter our trade, which is exactly what I did a few days ago. So we can see here that the stock came down to my price alert right around 112, and then I set a price alert up here at 118 in case it broke out of its falling wedge pattern, which it did, which then triggered my price alert. And when I saw the price alert, I checked where my stop loss needed to be, which I set right down here at 112. And then I checked to see what 3 times my stop loss would be to see if that would be a reasonable profit target, which puts the profit target right around 136, which we can see here once I draw my stop loss right around 112 and then my entry at about 118. And that puts our profit target up at about 136 way up here. And although the profit target is far away, Oracle has been one of the top performing stocks, only rivaled by Nvidia. So based on how much strength the stock has shown, I decided that this would still be a good trade, so I entered my position. And as you can see here by the strategy, we're completely avoiding making any of the deadly mistakes that most traders make when buying the dip. By following the strategy, we're avoiding buying too early, holding losing trades for too long, and adding to losing trades. So remember to set price alerts and set a stop loss and profit target before each and every trade, and I promise you, you'll be leagues better at day trading. And if you want to know my full detailed trading checklist that I use before every trade, check out my free trading guides where I'll be uploading my full trading checklist for free. I'll also be uploading another video soon going over my full trading checklist in detail, so keep on the lookout for that. And now that we know how to identify a good setup and how to enter and exit our trades, let's put it all together and go through some real live examples that I'm currently looking at buying right now. And know that these stocks are all on my watch list because of the alerts I've been setting over the last week. And once you set your own alerts like I'm about to show you, you'll have your own watch list. Otherwise, you can always follow my watch list and my trades here on YouTube or on my Instagram. So first, let's start off with some examples that don't quite make the cut, starting with Google. So we can see here on Google that it did in fact come back down to my price alert that I set right here for this gap fill. It came back down and it filled this gap The only issue here is that it hasn't really consolidated. This has been so choppy. We're not really seeing a clear pattern. And yes, it is in this range right here, but that would mean that my stop loss would have to be from here all the way down to here. And that's going to be pretty large. That's about an $8 stop loss. So if we were to set this stop loss, I'd be looking for about a $24 gain on this. And that would put us up to about $160 way up here, which it is possible of getting to, but honestly, we could make a better trade if this consolidated a little bit more, or maybe even broke out and then consolidated and then went up. Because even if it started at a higher price, like up here, we would still have a smaller stop loss, which would then let us make our profit target somewhere around like 150 or like 153. So really, this trade, it's not looking that great yet. So let's have another look at a stock that doesn't quite make the cut. So here we have Facebook. This actually does look better. You can see that we have this strong, aggressive trend going up, and it is now pulled back right here to the support. But the only issue that I don't quite like about this at the moment is that it's actually beneath the moving average and it's beneath the support. And you can see it came up above support right here and then got rejected. However, if this were to come up here and then start consolidating a little bit and then make a higher high and break out here, that could actually be a pretty good trade, because then our stop loss would only need to be down about here, and then our entry would be up about here. And that would only be, looks like maybe about $12 or so on this stock, which would put us up about $36. And that means that our profit target would only need to be somewhere right about here, which is quite doable. So this could turn into a good trade, but for now, all we're seeing is that it's going down and it's struggling. For all we know, this could come up here, not make a higher high, and then just keep going down. So right now, we have no real confirmation, so it's just not quite there yet. However, if it did make this consolidation, then I'd be setting a price alert right up here and looking for that trade entry. All right, so let's have another look at a stock that's doing a little bit better. And now on this chart, I actually see a few good setups. So let's go over some of the older setups on this one. Like for example, right here, we have this strong support line coming through. So back here, once it broke down through here, we could actually see that at that point, I'd be looking to set a price alert down below, just at another area of support where I might be interested. So I would have set a price alert down here and then set another price alert once that got hit, just a little bit higher to see if the stock is making strength. And as you could see, once it gets hit here, it then goes into this consolidation and then breaks out. And that's when we would enter, because we have this smaller consolidation right here. And then that way, our profit target doesn't have to be quite as far away. And we can see here that although this didn't make it all the way to the moon, it actually would have still been a profitable trade, because we made it up about past 1R, and then that's when we would have raised our stop loss. So you would have come away with some profit here, or at least a break even. We could then do the same thing right here once it pulls back and consolidates. But as you can see, it never went up or broke out. So this strategy right here saved us from entering a bad trade. And then the same thing applies over here, where it broke down, fell apart, and then once it came down here, I actually did enter this trade. I set a price alert right up here. And what happened was, you can see it in my other videos, that when it broke out, I was very interested in this because it consolidated, broke out, and then here, when it broke out again, that was more confirmation. So I added in a second time, and it made it not only past my profit target here, but kept going. And so I didn't sell my full position until about here. So as you could see, just by doing this strategy on Tesla, which is a very common stock that I trade, we would have entered one time, been stopped out at either break even or a little bit of profit, and then entered two more times, which turned into a big winning trade. Now, this doesn't happen all the time, but this is a good example of how to use this strategy. And then more recently, I actually set a price alert really low down over here, and then it came into that, but then since it never broke out, I never bought on that. Instead, it broke down to the downside, and I set another price alert down here. And yet again, it actually surprisingly made it to my price alert. But the problem is, that it never broke out to the upside. So yet again, I didn't enter this trade. So there are two bad trades that we missed, which is really good. And then now it actually made it all the way down to my third price alert down here, which is kind of shocking, but it's Tesla, so pretty volatile. And now I am actually looking for a buy in this position. And the reason why is because it's come up, it's consolidating right here, which lets us have this smaller stop loss. And then we're looking for a breakout above this moving average and to get back on top of this support. So all we need to do is set our price alert right up here. And then once it breaks out, you could either enter your trade or you could give it another day or two to see if it's going to consolidate and hold up over the support. Although if you do that, you might end up missing that trade, but a trade that's missed is not a losing trade. So it's completely fine. Remember that day trading is all about patience and that missing trades is completely fine. It's better to miss a trade than force a trade. So let's have a quick look at how I might enter this position if it does break out to the upside. If it does come to my price alert up here, I'll probably give it a day or so just to see if it can stay above this. And then after that, I would probably set a stop loss either right down here, or if you want to be really safe and you want to hold this for longer, you could set a stop loss down here. But do note that if you set the stop loss down here at about 222 and have your entry up here at about 242, you're going to need about a $60 profit target, which would put you all the way somewhere right around back up here. And although that's really doable and that would increase your likelihood of getting there by having this bigger stop loss, that may be a little harder to get to. Whereas if we took this smaller stop loss that is more risky, we might only need to get up to right about 270 or so, and that's very probable. So you could do this either way. All right, now let's have a look at Amazon. So what happened here was we had earnings, came out, did really well, so it gapped up. So what I did from there was I set my price alert down here where it'd be safe, and surprisingly, it actually did get hit. But the problem with this is I have nowhere to put a higher up price alert because really there's no consolidation. So I'm not seeing any strength and I'm not seeing any breakout. For all we know, this could just keep going straight down. We have no idea yet. We haven't even gotten anything that points to this going up whatsoever yet. However, what I will do is set a price alert right around here just in case, because I like to keep informed on these stocks that I like. And then the next time we get a price alert, we might see that this stock actually consolidated here, which would be great because then we could set a smaller stop loss and then enter our trade once it breaks out. So for now, all we can do is set a price alert and just hope that this consolidates. And if it doesn't and it just blows right through here and goes up in a straight line, then that's fine. Like, there was no confirmation, so therefore it's too risky and it's not worth taking. We need something that has a good stop loss and risk to reward ratio. And if this just goes up in a straight line, then that's not it. All right, so let's check out another stock. So here on Intuit, we have the same thing. It did come down to my price alert down here near the moving average. However, it's just been way too choppy. There isn't really a good entry here because my stop loss would have to be so large to accommodate for all this chop. And now it did consolidate here just a bit, which is looking pretty good. But the problem is it didn't really consolidate enough. It kind of just took off like a rocket. So there wasn't really enough confirmation to buy in here. I mean, we could have looked at this and saw that it broke out down below and then came back up into the range, which is always a good buy the dip strategy. I did actually get a price alert right up here, but when I saw it, it just didn't have enough confirmation, and so I just didn't buy it, and that's okay. So let's actually have a look at some stocks that I am looking at buying. So I've been interested in Salesforce for quite a while. It's a pretty good company. It's been doing really well for a long time. And so I set a price alert down here after I missed out on this giant move, and I was just hoping that it would come back down into this range where we would be able to pick it up near this moving average. So we got alerted down here, and then you see it actually did form this really good pattern right here where it consolidated, which gave us that very small stop loss for a good risk to reward. However, when it actually broke out, it gapped up so much that I actually did not buy this because the risk to reward would have had to have been too large. So I didn't buy this. And as you can see, that would have been a winning trade. And since then, I have now set another price alert that was down here, which has now been hit. It came down, it consolidated a little bit, but as you can see, we didn't move up to the upside. So I didn't enter any trade, nothing happened. So I set another price alert lower down here, which was yet again hit, but then it came down even lower down here, so I haven't entered a trade yet. But now that we're in this area of consolidation and most likely accumulation, I'm now setting a price alert right here, and I'm looking for a breakout and preferably a little bit of a consolidation up here before it takes off. In other words, I'm looking to enter this trade where I'd have an entry right about here, and we could do a stop loss down here, but if you want to be safe yet again, take a stop loss down here. And now that we have our entry and our stop loss, let's check how far this would need to go to be a good viable trade. So with a stop loss down here and an entry up here, we would need, looks like our profit target would be about $244. Now, that is possible. It's definitely possible. It would probably take a while, and it would need to make a higher high above this previous candlestick. So that makes it a little less likely and a little bit longer of a trade. So I might do that in my investing portfolio, but as far as an actual swing trade, I'd more likely take a smaller stop loss, which let's just have a check on that. With that smaller stop loss, looks like our profit target would be right about here, which is actually right where we have this other resistance. So this could be a pretty viable trade. It really depends how long do you want to be in this trade and how risky do you want it to be. If you don't want very much risk and you're okay being in a trade for quite a while, I would do the larger stop loss. But if you are looking for a quicker trade and you don't want to have to hold out for that long, then I would take the smaller stop loss. Now let's look at one final trade that I actually did take today on Alibaba. So what I did to find this trade is I've been setting price alerts down here at this level for quite a while, and it finally got hit. I honestly didn't think it would. I thought it would just break out and keep going, but I learned my lesson before when I bought this breakout over here and it did not work. So I've been waiting for it to come back. And now we finally have this little consolidation right here in this pocket. And the beauty about this trade is that the consolidation down here is very small, and it's also on this trend line that's been getting supported multiple times before. And it also has this support and resistance line right here. And so if it were to break out and get above this, it's a very strong likelihood that this was just a quick dip to sweep liquidity, and now we're looking at least a movement back to the top of this trend. So what I did today, when it broke out over my price alert right up here, I then bought, and my stop loss is down right about here. So let's go ahead and test this out and see how far my profit target needs to be. So with a stop loss right around $88 and an entry right around $92 here, we can see that this only needs to get up to about $103, which is perfectly right here at this support and resistance level that we had earlier. So I took this trade today and I'll be holding it to about 103. And if it consolidates even more somewhere along the lines and then breaks out higher through 103, I'll very likely be adding into this position. Let's simplify and summarize how to buy the dip like a pro one last time. First, set a price alert on a stock that you'd be interested in buying on a pullback. And once that alert gets triggered, set a new price alert in an area that would confirm strength in a stock, such as a breakout of a pattern or consolidation. Then, when the stock breaks out of consolidation, make sure that the profit target needed for your trade is reasonable. You should be able to get to a 3 times your risk reasonably. And if it is, then set your stop loss, set your profit target, and you're ready to enter your trade. And now you're ready to start buying the dip like a pro. But if you want to take your strategy and your day trading to another level, then check out my other videos on scaling into winning trades, how to adjust your stop loss when you're in a winning trade, and how to risk less and profit more. Remember, it's my life mission to make sure that you become a profitable day trader as quickly and as easily as possible, and I mean that. If you have any questions at all, let me know in the comments and I'll respond personally. I've also personally made free trading guides and a trade tracking journal you can download from the link in the description below. And if you want to see even more of my content so I can help you become a profitable day trader as quickly as possible, feel free to subscribe to my channel where I upload a new video every single week and shorts every day, or check out my Instagram where you can message me directly and see even more of my personal content. But until next time, stay patient, keep it simple, and be nice to yourself. Happy trading.